Good afternoon and welcome to another weekly review session with the Market Trader. My name's Ray, the Market Trader. Before we begin, we'll need to review our risk disclosure. Just want to remind everyone that the content that's being published and distributed by the Market Trader and its affiliates is to be treated as general information only. None of the information provided by the company or contained herein is intended as investment advice and offer to buy, sell, recommend, endorse, sponsor any future security, company, or fund. We all understand that future trading does carry a fair amount of risk and is not for every investor. An investor could potentially lose all or more of their investment capital. Only risk capital money that can be lost without jeopardizing one's financial security or lifestyle should be used for trading, and only those individuals with sufficient risk capital should consider trading. Nothing contained herein is a solicitation or a offer to buy, sell futures, options, or Forex, and past performance is not necessarily indicative of future results. Before we start reviewing the charts, we'll take a quick peek here at the news that is in store for us for the coming week in trading. So we'll go ahead and take a look at our news portal here. And you can see here on Monday, we have the U.S.-China tariff deadline coming up at the tail end of Monday. On Tuesday, we have the CPI report, both year over year, month over month. And then on Wednesday, we have the EIA crude oil report. And then we close out the week with PPI, core PPI, initial jobless claims, continuous jobless claims. And then finally with some retail sales, core retail sales, manufacturing, and then some inflationary numbers from Michigan. Okay, so fair amount of news, I would say, at the tail end of the week, and I would say maybe the beginning of the week is probably a little bit on the light side, given that the earnings season has now ended here. Okay, so let's go ahead now and turn our attention to the markets, and let's take a look at the charts. And we're going to go ahead and start with our normal instrument here. Let's locate the chart here. Okay, give me a second here, guys. All right, so now that we have the charts up and running, let's open up. We'll start off with the gold. And let's go ahead and open up the gold chart. We're going to go ahead and start off with the monthly. Okay, I'm just going to double confirm here. Remove some of our drawings. Okay. Let's confirm that's being shown. It is indeed shown. All right, so you can see here on the monthly chart, over the past few months here, we've been somewhat in a range. We started the month of August here with a relatively strong bullish candle, although we do see a little bit of weakness here up at the upper levels of the candle here. But nonetheless, the market continues to show momentum to the upside. Moving down to the weekly chart, weekly chart. We're kind of zooming in on some of these candles here. So you can see that the advance to the upside has slowed down a bit on the momentum. We see far more in the way of overlapping candles here, as you can see, the overlapping candles, both green and red candles, as we kind of grind our way higher. Moving down to the daily chart, again, similar to what we were seeing in the weekly. Again, a lot in the way of some overlapping candles here. If I go ahead and take a look at this, you can see we closed the week with a very. We've opened the week with a gap, so indicating that there's a fair amount of participants that want to participate in this market and pay a premium to the downside. So we're going to go ahead and do a little bit of a fixed range volume profile analysis here. We'll go Friday to Friday. Okay, so we'll go back to the prior Friday. And you can see while we closed the week above value, we have fallen back into value with this current candle that's being developed on the daily chart. So headed into the week, it appears that we've maybe have found a bit of weakness here at these levels, and that maybe we have the potential of maybe heading lower on these price points. So we'll go ahead now and turn our attention to crude oil. Take a look at crude oil. Again, we'll take a look at the monthly chart here. I'll start off with the monthly, get a sense of what monthly is doing here. So you can see we continue to develop some structure here to the downside. We have currently a candle that's developing bearish. We have a developing bearish engulfing candle, giving us further indication that there's a potential of more downside price action in this market. Moving on to the weekly chart. Looking at the weekly, again, you can see that we had quite the bearish engulfing candle here to start June. Okay, and now we have yet another candle that closed the week. Let's go ahead and remove some of our drawings here. We have yet another candle here that closed and broke below this area of support. We opened the week with yet another bearish candle below this current level. Again, giving us the indication that there's probably some more downside potential in this market. Let's go ahead now and take a look at the daily chart. Looking at the daily, you can see the series of bearish candles that we've had since pretty much the last end of June, actually end of July. We've had a series of bearish candles. And now we are coming up on an area here to the left-hand side that has the potential of becoming some level of support here at the, let's see, go ahead and see if I can draw in this area of support here down below. So right around the 63 level does appear to be an area of support, but as you can see here with the direction and slope of this line here, we continue to be in bearish structure. All right, so let's go ahead now and do the same kind of volume analysis that we did in the gold. We're going to go ahead and start off with this candle here and take this back to the prior week candle here. And you can see with the open of this candle, we opened below value from this past week, again indicating that there's a fair amount of interest here in lower prices in this market. So I would say that headed into the week, we remain somewhat bearish in this market, with the understanding that we are coming into some area of potential support, potential demand that could cause the market to reverse from this level. Okay, assuming that we can break below this 61 level, I think that opens up the door for price to maybe come back to visit lower prices here around the 57, 56 level. Okay, but we first need to get below 61 in before we can expect that. Okay, so now that we've reviewed the gold and the crude oil, we'll turn our attention to the equity markets. We'll start off with the NASDAQ. We'll take a look at the NASDAQ from the monthly perspective. and see what monthly is telling us. Okay, so we have looking at the monthly chart, you can see that we closed the month of July with a rather strong bullish candle, bullish engulfing candle, and now mid or coming up on the middle of August here, we also have yet another developing candle that's bullish. Moving down to actually this is a 3-month. Let's move down to the 1 month. 1 month. Okay, so 1 month again, yet another candle that closed the month bullish. We have another candle mid-August. That's also midway of the month, also bullish. Dropping down to the weekly chart. Okay, so it looks like we started out the week with the candle here above the close of the Friday's candle. Friday's candle was a bullish engulfing candle, indicating a fair amount of strength in this current move to the upside, again showing indications that the market is quite bullish. Moving down to the daily chart, we've had our series of candles. Let's see, 1, 2, 3, 4, 5. Five of the last 6 candles have been to the bullish side. We are now up against some levels here around 23,770, that area. So we're up at the highs of the market here. Again, inside some bullish structure here. We're going to go ahead and do a little bit of volume analysis here. We'll take a start of the close of Friday back to the prior Friday. And you can see that price managed to close above value. And we opened the week with yet another candle above value, indicating that there is still a fair amount of interest in taking this market higher. Moving on to the S&P. Looking at the S&P, again, starting from the monthly chart and working our way down. We're going to take a look at the monthly here. Let's see, monthly chart. Okay, we're going to go ahead and remove some of our drawings here. Okay, so again, we are developing yet another bullish candle here. We closed the month of July with a rather strong bullish candle to the upside. We started the month with a candle maybe that started at the beginning of the open of this current July candle, and now we're up at the upper end or upper third of the July candle, okay, indicating that there's still a fair amount of interest in taking this market higher. Moving down to the weekly chart. Looking at the weekly chart, you can see that we closed out the week with not quite a bullish engulfing candle, but a bullish, piercing candle nonetheless. We've kind of closed about 3/4 or 7/8 of this candle that we had here, and now we have yet another candle that has opened the week slightly above the close of Friday's candle here. Okay, so start out the week. Taking a look at the daily chart, we're going to go ahead and take a look at and do a little bit of volume analysis. We'll go week to week here and get a sense similar to the NASDAQ. You can see that the S&P with this candle, assuming that it does close above this candle here, we would close above value, indicating that there's a fair amount of interest or fair amount of participation. Participants are willing to pay a premium to be part of this market to the upside. Let's see. Maybe I was going to do a little bit of Fibonacci analysis here. Maybe take a look at this swing here and see where price could go. So I'm going to take this most recent swing here and drag this, let's see, here, and then bring this down to here. And you can see that the forecast, for this market, if we were just to take the measure of this range here, if we just measure this swing here from here to here, what is our forecast? Well, based on this pullback, our forecast for this market is somewhere, I guess, coming up on this 67.80 level. Okay, this would be the 100% extension of that swing. Okay, so 67.30 looks like 67.30 would be the 100% extension of this swing here. Okay, so taking this swing high and then pulling back to the retracement, we're looking at 100% extension at the 67 25, maybe up to the 67.30 level in this market. Moving on to the Dow. Okay, when we take a look at the Dow here again, we'll start off with the monthly chart. Taking a look at the monthly chart, let's go ahead and make sure I have the right symbol here. Okay, now let's move on to the monthly chart here. So looking at the monthly chart, we'll remove some of our drawings here. You see that we are seeing a little bit of weakness in the Dow over some of the other equity markets that we've been looking at of late here. We did make an attempt here to get price above this area. That was met with some sellers. We started out the month with a buying wick, and we have created somewhat a bullish candle here to the upside, but we have yet to make any sort of new highs here. Okay, so we're up maybe on the lower end of this most recent monthly candle. Okay, but still either in a bullish move, bullish, or somewhat in range. Looking at the weekly chart, I'm just going to go ahead and move down to the weekly chart. Taking a look at the weekly chart, you can see that we closed out the week. Well, actually, no, we closed out not this past week, but the prior week with a bearish engulfing candle. That was followed by a bullish candle, and now we are opening with yet another bullish candle here to potential upside move here. Okay. Now, we have yet to make a new high in this market, so we're still kind of, I would say, kind of at the mercy of this participant who was able to take the market lower. Okay, so we're still inside this bearish candle, this bearish engulfing candle to the downside. So let's take a peek at this from a daily chart and see what this is telling us here. So we can see that we created a little bit of a demand zone here. So we'll go ahead and draw that in. And here that's been created around this, 44,080 level. We have some resistance above us at 45,348. But we have broken some structure to the downside. So I would say that this market looks to me that we might be still in somewhat of bearish structure to the downside. Okay, until we are able to break above this 45,240 level. I would say that we are still in bearish structure. We are indeed seeing some signs that maybe we might have found some buyers, but it's, as I mentioned, as long as we remain inside this swing to the downside that's broken structure, the expectation is that we'll either remain in range, okay, or continue to potential to the downside here. Okay. We're going to go ahead and draw in this channel here. Okay, so if we are looking to maybe look for a continuation move, well, we'd like to see price break this channel, bullish channel here to the downside, and that would give us a little bit of an indication that price is going to continue lower. Okay. Until then, we can potentially participate in a move that would take us maybe back closer to the highs of the market. That would be kind of part of this range that we're currently seeing here. So before we close out the session, we'll just go make one final pass across all the markets just to summarize our position in these markets. So right now, I would say the gold is somewhat, looking kind of at the top of the market in some sort of range, giving us maybe some indication, maybe a little bit of a 3-bar reversal pattern that's developing here in this market that could potentially lead to further price move to the downside based on what I'm seeing on the daily chart. Looking at the crude oil again, I think continues to show signs of weakness to the downside. We are coming into some areas that could have the potential of being somewhat supportive. So that could provide us maybe a location for maybe a somewhat of a reversal in price, at least a little bit of a retracement of this current swing. So we could maybe look at Fibonacci here a little bit and see what kind of targets we could potentially expect to see as part of any sort of reversal in price. So we have some targets here. We have, let's see, this is probably the 25%. This is the 38%, and this is probably the 50% retracement of this swing. Okay, so these are kind of some reasonable targets if we are going to reverse away from this level, that we have 1, 2, 3 target areas that could offer us locations for a continuation to the downside. Okay, but until then, certainly we could offer us maybe an opportunity to those targets as a potential execution until we reach some of these ranges. So that's what I have for the crude oil. We'll move on to the equity markets. So NQ continues to look bullish, right? We're above value, showing signs that we are continuing to look for higher pricing in this market. Obviously, we're at the top of the range, but I would say that we need to continue to look for opportunities, assuming that we can remain above this 23,752 or 757. This is the most recent close here. Let's see, the most recent close was 23,713, looks like. Okay, assuming that we can remain above that set of candles there, that could again give us a reference level for continued move to the upside. We are above value from the prior week, again indicating that there is still a fair amount of interest to the upside. So we're headed into the week, I would say, in the NASDAQ, looking for a continuation move higher. Looking at the S&P also giving us some indications. We are again with this current candle above this area of value from the prior week. We're again starting the week above this, indicating that there is again maybe a continuation possibility move in this market to the upside. We have our 61.8% extension target here at 65.43. We have the 100% extension level at 67.30. Okay, so these are kind of some upside targets for this market. Looking at the Dow probably looking the most bearish of the three markets, although in its own right, maybe showing some signs here as well. Let's see if I can actually have see if doesn't appear I have my EMA there. Let's see if we can add our 9 EMA here. So we'll just go ahead and add that to this chart. And we will make that, see. Just going to adjust this here just to get a sense of where price is in relation to the 9 EMA. And you can see here that price with the open of this candle has managed to get above the 9 EMA, which is obviously a bullish sign, assuming that we can remain above it. That is giving us some indication maybe that there is maybe some further upside potential in this market. We have a demand level that's been established here. It looks like we are reacting away from it, and we have a developing candle that appears to be looking to head higher. Okay, so I would say out of the three markets, the Dow does appear to be the weakest of the three. We are at the lower end of the swing here. That could potentially provide us maybe a little bit of an upside move here. And maybe I would say that in order to really kind of change the structure here to the upside, we need to get above this 45,242 level to really kind of change the structure from a market that's been somewhat in range, maybe a hint bearish, to a market that's maybe turning bullish. Okay, so with that, we're going to go ahead and close this session as we close most sessions. As we head into the week of trading, trade well, trade safe, trade like a pro, be a market trader.